Hello, everybody. How are we doing? This is Jeremy Blossom. I am with tradestocks.com. Let me know if you can hear me. There's a chat feature right here. Go ahead and give me a hey, what's up, and where are you from? Great. Thank you, Jeff. Good to see you. I'm glad you were able to make it tonight. The sound is, all right, let me turn down the sound a little bit. I'm getting feedback that it's super intense. All right, great. Looks like it's getting a little bit better. Where's everybody from? I'm in my office here in Laguna Beach, California. The weather is spectacular. I feel as if we're turning a corner as a country. The COVID crisis is slowly starting to go away. Hey, all right. We got Boston, we got Pennsylvania, nice. Las Vegas, there's good weather, great. Yeah, so, I don't know about you guys, but I've got two little kids at home. So having the weather get nicer and some sort of normalness starting to come back has been a huge relief. There's only 2 weeks left. I think there's like 10 days left of school for my daughter. My son is going to be in kindergarten next year. So the more we can, get out and do things where the weather's nice, the better for us. So this has been amazing. What's everybody been up to obviously get the weather? What are they doing in this COVID? You guys watching a lot of movies, hikes, bike rides? Any fellow mountain bikers out there? I know I've been doing a lot of that as well. It's been great. Good exercise. Let me know. JC will be joining us here in just a minute. We are a few minutes early. Hiking. All right, John. Yeah, I love to hike. I'm a big, my family and I love to hike. Let's make sure, let me, video participants. I'm going to kill this video feed here. All right. Yeah, work and homeschooling the kids. Yeah, I can relate to that as well. I don't know about you when you're homeschooling your kids, if your kids are getting as frustrated with me as they are with you. I'm teaching my daughter how to find the perimeter and she doesn't like my method. So it's really, really funny to sit down with her. She gets so frustrated with me, and her mom's not great at math. So she's got no choice but to work with me. That's always been interesting. Yeah. This person that I'm talking to now is like, I feel like I'm the one that's getting homeschooled. Totally. There are the new Common Core, which for those of you maybe whose kids are older or don't have any kids, the government said a few years ago that everybody needs to have the standardized education program. And they have this thing called Common Core, which is like a methodology on how to go about teaching your kids. And man, it is not the way that we were taught when we were in school. So I also feel like I'm getting homeschooled because I have to learn how to show the work for some of these math equations. And then once I do that, then I've got to figure out the actual problem that they're asking. So YouTube has been a valuable resource for me on the side. And by the way, my daughter's in 3rd grade. We're not talking calculus here. So something's up when you've got to YouTube a third grade math problem. But hey, it's all about being real on this show. So this is the COVID crisis of 2020. For those of you who don't know who I am, my name is Jeremy Blossom. I am the founder of tradestocks.com. We have well over 500,000 people who have signed up for Trade Stocks newsletter. If you haven't done so already, go to tradestocks.com and do that. And one of the biggest newsletters we have is my boy JC's. JC, welcome.
What's up, Jag?
How we doing, man?
Man, it was a good day today, Jeremy. It was a good day. Market went our way. I've been building a dam in my backyard. I got a new house, so I got this creek back there, so I'm building this dam. I'm carrying these boulders on my shoulder. If I go out there for an hour a day, I'm telling you, there's no better workout out there than carrying buckets of mud for these freaking stone steps I'm building. It's a joke, dude. It's a joke.
Well, you look great, man. You look like you've been outside with some rigorous activity.
Yeah.
That's fantastic. Good for you, my friend.
No music, right? Like always when I work out, always music, right?
Absolutely. What kind of music? AC/DC? You like a little that's my go-to.
No, maybe a little Rick Ross, you know.
That would be hilarious if that was true.
It is incredibly true.
Really?
The boss.
I like it.
Yeah. But when you're out in nature lifting boulders and buckets of mud, so 2 lessons. Number 1, your water boots, you shouldn't climb uphill carrying heavy things in your water boots. Leave the water boots by the water. Lesson 1, city kid learned today. Lesson 2, don't fill your buckets of mud up to the top because they're really heavy. You're better off making 2 trips. So I'm learning lessons, Jeremy. What can I tell you?
I love it. You know, people thought they were coming here to learn how to trade and how to use technical analysis to make money. But no, you guys, we have designated the next 60 minutes to talk about building dams, what kind of water shoes you should be wearing when building dams, and the appropriate weight distribution in a bucket going up a hill.
The grass, when you create what they call survivor mortar with the grass acts as rebar. It's crazy.
Well, I'm so happy to see your face, man. This has been what a wild ride we've been on over the last 5-6 weeks doing this show. We've moved it to a new time, boys and girls who are joining us. We normally do this right after the market closes. Show of hands, the participants that are now joining us, how many of you like this time? So let us know, yes, I like this time. Oh, I liked 1 o'clock better. We're curious. We're trying to make this as successful as possible. So let me know. All right. John says yes. And John also says we used to build dams all summer as a kid.
Well, the idea is to stay a kid. Somebody on Twitter was like, what are you, 12? I'm like, yeah, I'm trying to. And like, I'm telling my wife, she's like, oh, you're outside doing man things. I'm like, these aren't man things. These are boy things. Man things is taking care of your family, making money, make sure that they're protected, make sure that they're getting food on the table. Those are man things. Going out there and lifting boulder, those are boy things, right? Let's just make that perfectly clear.
I would absolutely second that. My wife also likes to tell me that things are boy things or man things, and I definitely have to correct her when there is, I admit there's some boyish things that we all like to do. Yeah, light off fireworks and stuff like that, right? That's like, but I'm into mountain biking, and I bought myself a ramp. And she's like, oh, that's so nice of you. You bought a ramp for Bennett. My son's 5 years old. The ramp shows up, and the ramp is about as high as my waist and about as tall as my son. And she goes, Bennett can't ride this ramp. I thought this ramp was for boys. And I looked at her, JC, I caught her eye. I go, it's not. It's for men. And I had this giant smile on my face because that's something that her and I go back and forth with all the time as well. So that was really funny. So, all right, man, we are here. I'm about to go live here on Facebook. I wanted to give everybody a couple of minutes to join us. Some people are like, no, after the market's better any day. I like this time. After market, I should be making dinner now. James, we're going to give you a recipe to make money. That's what's important, right? Making money. You can eat dinner at any time. Eating dinner is for people who don't know how to make money trading. That's what I say. I never say that.
Coffee's for closers only. Put that coffee down.
Closers only. Closers only.
You know, all right, nice, Jeremy. You know what's nice about this 8 o'clock hour is that it's not earlier, so you know you can't get in the way. Right?
Well, now you don't have to hide the glass of wine. You know, right after the market closes, you're gonna have to keep that one in the background. It's 8 o'clock at night.
I wish that were the case. Trust me, I wish I was drinking Bordeaux at 5 o'clock in the afternoon. I'm not. But 8 o'clock. Yeah, I got a nice 2012 Medoc, you know, gravel soil, 100% Cabernet Sauvignon. Lovely.
Perfect. If anybody else is participating in a nice adult beverage tonight, let us know what you're drinking. We love to, and especially if it's wine, I know that you can get JC going if you want to talk about what kind of wine you're drinking. But in all seriousness, we are for sure live now on Facebook. Hello, everybody in the Facebook world. It is just 7 minutes past the hour, and we're here to talk about trading, the markets, making money using technical analysis, and what the heck is going on. Week by week, we've been giving you guys what we think are some amazing trade recommendations, trade ideas, and most importantly, trade analysis. This program is meant for educational purposes only. It's not any advocate to buy or sell anything. Please consult your financial advisor, planner, whoever it is before you make any trades. This is for educational purposes only. So bring your questions, bring your ideas, and most importantly, bring your ticker symbol. So if you haven't done so already, go ahead and throw a ticker symbol that you want JC and I to review. We're going to be doing that. And before we do the tickers, go into each individual ticker symbol, we have a huge announcement. We have been dropping some subtle hints over the last 5 or 6 weeks of a project that JC and I have been working on for a while. Our teams are exhausted. JC has a funny story, maybe he'll tell later, about one of his team members' requests about how hard we've been working on this. So we are going to talk about that tonight. So make sure you guys stay around. JC, we're here to talk about some charts, baby. I know that you got some cooking. What is it that you want to go over? The floor is yours, my friend.
The charts are going wild, Jeremy. There's a lot of them. And this week was our monthly conference call. So I have more charts than ever. You know, my monthly conference call, it's funny because like these institutions pay us a lot of money for these 150 charts that I put together every month. And you know, subscribers pay $2,000 or so a year or whatever it is. You know who's winning in this whole thing? What this forces me to do is it forces me to collect my thoughts and drill down what's happening on planet Earth, right? In just 150 charts. Like I have thousands of charts, but it's so difficult for me to just pin it to, all right, you're giving me an hour. These are the 150 charts that I think tell the story with the trade ideas. It's really hard. Finding the charts is not the hard part. I got those. It's
sure.
Drilling it down to only 150 charts and telling like Straza, no, we don't need a fourth healthcare relative chart, or like Bruni, like nobody cares about your rice futures, bro. Like enough. Like your OJ futures, great trade. Nobody cared. Right? Nobody cared. And nobody's going to care about your rice futures. But I'm going to bring it up anyway, just because it's going to make you happy. So we have so many charts. So the hard part is really drilling it down. But what that allows me to do is reflect and be like, okay, what is the big theme? What is the big message that the charts, what's the story they're telling? And the story is we're bifurcated as hell. You know, there's stocks going up, there's stocks going down. And that's pretty cool, isn't it?
It is really cool. I'm going to say it tells us that we have, this is my ugly writing, but I don't know if you guys can see that, it's opportunity. That's what that says. When JC says he's got too many charts to pull and tell you guys about, that means there's just too much opportunity. And especially when you're saying there's people making money in rice futures, that's pretty great, man.
Yeah,
so
rice. Yeah, you haven't been watching you don't have that up on your morning review, your rough price review?
I'm going to be totally honest with you. I do not. I don't even know the ticker symbol, dude. I don't think I used to trade commodities. I had my Series 3 license. I did that stuff for 7.5 years, and I never once traded a rough rice concert, a futures contract. Excuse me.
Well, it's never too late to start.
No, it's not. I guess not. But let's get into it, man. What do you got for us?
Jeremy, I got to tell you, it's a big nothing burger in the major indexes. Treasury bonds hovering near highs, not going anywhere. S&P 500, most stocks hovering up near highs, not going anywhere. You know, gold making new highs, but you know, not like going parabolic. So like, there's a calm, right? And you know, when you talk to your average investor and you tell them, man, how calm is this market? They're gonna look at you like, say, what? Right? But it's true. This is an incredibly calm market, not much going on. But there's something that I think that is important for every investor, no matter the time frame, to understand. This is a chart of the S&P 500 versus bonds up above, and down below is the S&P 500 versus gold. Okay. When we look at the S&P, we look at a large caps US. This is the greatest. The S&P 500 is the greatest momentum strategy of all time, Jeremy, because it buys more of the ones doing the best and it kicks out the ones doing the worst. There's no other momentum strategy that's this good in the history of indexes. Let's make that perfectly clear. So when we talk about the U.S. stock market, I think that's a pretty damn good gauge, right?
Absolutely.
So what are we going to do? We're going to compare it to its alternatives. What are two great alternatives? Bonds and gold. Okay. We found key support in the S&P 500 relative to bonds and gold at the end of 2018. We did that again last summer, and then that broke on March the 6th. So what does that mean, JC? Why should we give a damn? Because this was all support, and if our polarity principles, which they teach you at technical analysis kindergarten, have any role in this scenario, is that former support is going to turn into resistance. So I think as equity investors, as investors in general, as investors interested in the stock market, we need to be aware of the fact that stocks are an underperforming asset stuck below overhead supply. All right, so what does that mean in plain English? That means that the investors around the world are buying gold and bonds at a more aggressive rate than they are buying stocks. And when I say stocks, I mean I'm generalizing here. So stocks are still under pressure, particularly on a relative basis. So what do we do about it? What does that mean for us? That means that we need to be buying stocks that are going up, that are doing well, and we need to be selling those that are not. This is a bifurcated market. There are stocks going up and stocks going down, Jay.
I love it. I love it. And this chart does explain it all, I think, and this is super important before you move on. And I'm glad that you kind of summed it all up, because what this basically tells us is, where's the money going? There's a lot of money out there. There's money controlled by really, really smart people, smart algorithms. And what we rely on technical analysis, one of the big things we rely on technical analysis to help us do is show us where the smart money and where the real money is going. So what this chart has done here is showed you that, guess what, the money would rather be, if they're saying, hey, I want my money to get the best bang for my buck, get the biggest return possible for us, where should I put it? This is telling you that, guess what, people would rather have their money working for you in other places besides the S&P 500. We're talking in general terms here. Sure, there may be, and there are, and we're going to talk about them, some specific stocks that are killer. We love them. Other ones that, hey, we want to short. We're capitalists here. We don't care if it goes up or down. We can short it too.
If we're short the stock, Jeremy, we want it to go to zero tomorrow.
Yes. Simple.
We're short.
We're short. Yeah.
I don't feel bad for anybody. So here we're talking about that bifurcation. So this is something this is near and dear to my heart, Jeremy, because this is Dow theory 101. This goes back to the late 1880s. Charlie Dow, somewhere around here. I'm still like organizing my office and figuring out my situation. But once I do, I'm going to bring out the Dow Theory Unplugged, which is my collection of Dow theory letters from the 1800s that Charlie Dow wrote. I still read them. Before I moved, I was reading 2 entries every morning with my coffee as the coffee was being made, like just to catch up and read them all. And man, you'd be amazed. The things you read in these Dow theory letters, if you take the date out and the ticker symbols, you would think it was written this morning. Like, it's crazy. Oh
Wow.
my God, it's fascinating. So anyway, when Charlie Dow came up with the Dow Transports and the Dow Industrials, his idea was, okay, the stocks in the Dow Jones Industrial Average are going to be the companies that make the goods, and then what was then the Dow Jones Railroad Average is the stocks that deliver the goods. Now, obviously, 130 years has gone by, so we have other methods of transportation, and a solid argument that some of my smartest friends make, because this is the stuff that a bunch of math nerds talk about over beers, is whether Dow theory from 130 years ago is still applicable today. The argument is that semiconductors, which drive the internet, is how information and services are delivered today. Valid argument, fine. We don't have an answer, so you know what we do? We just look at all of them, right? Just include it in our analysis. So the argument is, are the Dow Jones Transports the transportation stocks of today, or semiconductors? So we just look at them both, and just this really tells the bifurcation story. Transports making lower lows, lower highs, stuck below the 2018 lows, and semiconductors never even got close to those 2018 lows, are above their 2019 highs, and just look, it's like night and day, semiconductors and transports, Jeremy. So I think this new Dow theory versus old Dow theory, or new transports versus old transports sort of situation, I think is really interesting.
Super interesting. And again, these subtle differences, and this is what you're doing. And I like adding this color commentary for folks at home, right? As people are trying to understand trading and understand these markets, by comparing and contrasting, that's how you're able to go and find out where there's the opportunities, is by comparing and contrasting. And when you know anything, whether your industry, the field that you're in, or if you like to cook, when you really like to cook, what are you doing all the time? You're comparing and contrasting ingredients that you've used over and over and over again with one another, and you find the one that's the best, and then you compare it against the other one. So as JC goes through his analysis, he's constantly going back and comparing and contrasting. And when there's the difference, when it's not the same, or when it is the same, it's like, okay, the story is continuing, all right? Carry on, right? When the story changes is when there is a difference that shouldn't be happening, or, wow, that's really, or it should be happening, you expected it to happen. Then he dives deeper, but it's that top-down approach that makes him so effective and makes your trade recommendation so phenomenal. It's also how he's able to find a lot of those asymmetric risk-reward ratio. But I'm adding that color commentary because I think it's important. It's something I pick up on.
Jay, because it's a combination of things, right? It's about finding those risk versus reward opportunities that are skewed in our favor, right? Of course, obviously. But if that top-down approach that you were just talking about increases our probability of success because we're trading in the direction of the underlying trend, right? So it's a combination of, we're not just throwing darts and finding risk versus reward. We're also swimming with the tide, right?
Sure.
And I have a creek in my backyard now. I don't know if you heard. So I see the tide. I see it's moving. In fact, I'm putting rocks to slow it down so that I can put fish. I bought a bunch of goldfish, but it's moving.
Yeah, you should make a dam or something, to like help, with the creek, and I'm just throwing it out there.
I've built more dams in the past week than I have in the past 38 years combined.
Of your entire life. I bet that last dam looks amazing then.
Well, I put it on Twitter. I was like, hey, I built a dam. And then like all these like non-city kids were like, no, JC, that's not how you do it. So, so I actually took their advice, and I was like, wow, this is really fantastic. So I took some pictures of what I did. I put it on Twitter, and they're like, no, JC, if the water doesn't move, you're going to get flies because mosquitoes love laying eggs in still water. All right. They didn't teach us that on 34th Street and Park Avenue. You know what I mean? Like, that's a new one on me. So yeah, anyway, I built like a canal to go around, let the water flow. So I'm making everybody happy. All the tree huggers are happy with me. Everybody's winning in this situation. especially
And
in
your
the profile.
backyard's looking amazing. But I want to stop you for a second. You mentioned Twitter. Ladies and gentlemen, I don't know if you saw, but I definitely saw that marketwatch.com, one of the premier financial publishing media companies online today, listed our guy JC as one of the top 10 Twitter accounts to follow for technical analysis, which I was super, super proud to see. So big round of applause, everybody at home. Cheers. If I was drinking, I'd cheers you right now, JC. So cheers to you. That is a huge accomplishment. No joke, because there are a lot of guys out there. This is a very extremely competitive environment. And, you constantly get to the number one spot. So there are only 2,600 chartered market technicians in the world. I don't know if everybody knows that. We have in our presence one of them. And not only that, but as far as people following, like who should we follow, who should we get some advice for? Twitter is a hotbed for active market analysis, trading, investing. A lot of people get it. So there it is. Oh, this is on even Business Insider as well. I saw it on MarketWatch too.
Well, MarketWatch has their list, which they are nice enough to include me. Quite often, Business Insider makes their list. Jeremy, you're the marketing guy. People love lists, right?
They do love lists. People like to read lists. That's why they make them.
Yeah. So Business Insider, was nice enough to include me in their list of top technical analysts to follow. They've included me in their past list of top finance Twitter to follow. It's just, listen, it's nice to be included among some of these colleagues of mine that I have a ton of respect for. In many cases, I learn from. In many cases, I use the tools that they taught me, whether directly or indirectly. So just to be included with some of these names is huge honor.
You're kind of like the Kylie Jenner or Kim Kardashian of technical analysis, bro. If you think about it, right? Because they're huge on social media, and so are you. I mean, right? Top 10 Instagram accounts of all time, top 10 marketing analysis Twitter accounts. I see a direct correlation. I should just start calling you Kim Kardashian from now on, because you're about to show me something.
Yeah, the plastic surgery, I'd take the under on that. I'm all natural, Jeremy. All natural.
Building that business.
I've had a haircut in a minute. Look at this. All natural. Lips. I woke up this way.
Yeah, well, congrats, man. That's still nevertheless really, really great, dude. That's amazing.
All right, let's talk turkey, Jeremy. All right, before you start asking about gold stocks again.
I know. That's my first question for you. So
communication has my attention. So let me just to rewind, just tell the folks real quick. These index providers, Standard & Poor's and iShares and Dow Jones, and everyone's got an index these days. I mean, we create indexes almost every day. We just don't create ETFs from it because it's a pain in the ass. But they created a communications index. So they basically took Facebook and Google out of the tech sector. They brought in Comcast, Verizon, AT&T, Netflix is on there as well. So actually, I have the whole list right here. T-Mobile, EA, Activision, Disney, all of these are in the new communications index. It was created, I'm pretty sure, somewhere around summer 2018. They basically took some of the best tech stocks and took them out. So you can consider them tech, consider them not. But this communications index is really, really impressive. So I just wanted to preface with that. And let's take a look. This is the communications sector up above, breaking out above its 2018 highs. And then on a relative basis, breaking out to new highs relative to the rest of the market. This is incredibly impressive. And then when you look at what Facebook is doing, Jeremy, look at this thing.
Wow.
This is Facebook breaking out of a 2-year base. 2 years of Facebook doing nothing. A big nothing burger for investors of Facebook. Not the Facebook. Facebook, right? So if you think that $220 a share is cool, $1,000 a share is really cool.
Yeah, it's got a good ring to it. It's got a good ring to it. Public.com came out with, it's a new trading app, and they came out with this really interesting app. JC, I don't know if you've seen it. Just for the folks at home, I tried it out. So what you could do is it's called Ticker Time Machine. And so Ticker Time Machine, maybe if my staff can drop Ticker Time Machine and drop the app link in there. It's kind of a fun app. What it basically allows you to do is you can put in any ticker symbol you want, the date, and it'll say if you invested $1,000 on that date, where would you be at now? Up or down, doesn't matter, right? So you can look at when a company went IPO'd or whatever the case was. So Ticker Time Machine, and I just saw one the other day, if you would have put $1,000 in Facebook when it IPO'd, you'd have like $5,000 today, but it IPO'd a few years ago. So anyway, interesting, thought I'd throw that out there. You know me and my tools, I'd like to share them with as many people as possible.
Yeah. How much would you have lost if you invested in GE 15, 20 years?
Yeah, I know. It will tell you. That's the cool thing. You could play with gold. I put in GLD in there and some of the other gold mining stocks, and you can see. Yep, you can see. It's all pretty. It's just for fun, folks. It's not like hey, this is why you should have done something or shouldn't have done something. But it is a Ticker Time Machine. Pretty cool app, and it's free. All right, I digress.
Are you done with your public service announcement? So
people want to know, man.
People want to know, how do we build sexy charts? I got people emailing me about building sexy charts every day. They're like, JC, it's crazy. So speaking of sexy charts, this T-Mobile, I got to tell you, this is a big base. I mean, look at that high in 2007, and it took, 13 years to finally break out above it? So it's interesting things happening, and when you're seeing, forget about whether, we need to buy T-Mobile or sell T-Mobile. Fine, if you want to buy T-Mobile if we're above the 2007 highs, have a ball. I hope you probably do great. Sell it at 125, great. That's not what this is really about. It's about seeing that we are making new all-time highs in T-Mobile. Now let's go to, where is it? Take two. Also in the communications index. By the way, if you guys kind of figured it out, this is my communications index workbook. Jeremy's like, communications index. Very interesting.
I'm being very studious at the moment.
Communications index. What is this take two that you speak of?
Yeah,
Take two, Jeremy?
I don't know.
Video game maker. They probably make some video games that you're familiar with. I don't know if the audience probably knows better than you and me. They make a really popular one. I don't know if it's like Street Fighter 2. I don't know. I'm just making things up at this point. I don't think anybody makes Street Fighter 2 anymore.
Who knows? Someone know who? If anybody knows the game.
Their big one is a popular one that everybody knows. But anyway, I'm not a video gamer. I used to be back, high school and college and whatnot. I was like, I had the best Madden team ever or something. I had too much time in my hands, clearly. Not enough charting going on. But look at this take two, man. Multi-year base throughout 2005, 2006. I remember this time very well because we were actually trading video game stocks pretty aggressively at the time. Activision, I remember, had some insider buying or something like that. We were buying it, so we were looking at its competitors. So I was watching Take-Two and its messy mess that it was for this decade. But man, when these messy messes resolve in a direction, they tend to have pretty explosive moves. And just look at this ripper. Look at this, from $7 to 120 just in a few years.
That's nice.
Stocks under 10, Jeremy. Is fascinating, is it not?
It's very fascinating.
Very fascinating. So after a huge ripper, stocks are like human beings. We can't just like lift buckets of mud when you're building a dam and just go on forever. You need to slow down. And, you know, after like maybe an hour or two, you know, relax, take a shower, look at some charts, pour yourself a glass of wine, right? We can't just go on forever. Stocks are the same way. Like, you can't just go forever. You got to like relax. Like, you know, a little bit of take it easy, you know?
Yeah, yeah.
So that's what's been going on over the last few years. Take-Two has been, you know, given a little take it easy, you know? So here we go, a couple of years, and consolidations tend to resolve in the direction of the underlying trend, which obviously in Take-Two is up. So the fact that we are now resolving up is perfectly normal, should be expected, and anything else, in my opinion, in the, you know, throughout my experience of studying charts, anything else would be unusual and would raise red flags. So the fact that we're resolving higher seems to be perfectly normal as far as I'm concerned. And if we're above 135, you know, I think Take-Two's a buy. I think we're going to 200, maybe $300. This thing's a beast.
I love it. And Ben made it clear it's the WWE games. He used to work on them when they were made by THQ. Thank you, Ben.
Oh, there's another one though. I mean, I'm sure that's the case, but there's another super popular one. I don't know if the audience. I'm telling you.
Benjamin, do you know of the really, really super popular one? JC is not satisfied with your answer. Not satisfied.
I'm telling you. I'm not a fundamental guy, so like the less I know, the better.
You keep going to your next chart. Benjamin and I will do the research. I see you trying to pull it up right now. You just
I'm telling you, it's driving me crazy.
You just go back, and we will come up with the answer. I'm sure
Grand Theft Auto. That's the one.
Oh.
Man, I used to play that 20 years ago.
That's really like one of the best games ever.
They make it. I told you.
That is one of the best games ever. I downloaded, so I got my kids for Christmas an Xbox, and one of the first games I downloaded was that game. My wife's looking at me like I'm insane.
Hold on, you download the games now?
Yeah, they're on the internets.
So you download the games, you don't have to like buy like.
You don't have no cases. I've got no. I mean, you still can, but I have none, dude. It's like a box. It's
Remember
just
the Nintendo where you go.
Yes, I would. You'd blow it, and like one kid would always have the touch, right? Like every time they say, "I got it, guys. I know what to do. I know what to do. Trust me." Like, and he goes and he like taps it 3 times, rubs its belly. You know what I mean? Like takes a special T-shirt, and yes, I do remember that. So fun.
Grand Theft Auto. See,
yeah.
I think they're still making games. But listen, it's the communication sector in general that has my attention. And you know why, Jeremy? Because the stocks. So let's just rewind. It's just so you could like talk about what we're doing here. We start with the sector itself. This is the communication sector. This is communications on a relative basis. This is momentum in communications. And then these are the biggest stocks in the index, right? So then we go to Facebook. And by the way, let me just give a shout out quick to the homies at Koifin. I'm an investor, a private investor in Koifin, just full disclosure, but just to show you like how much I believe in this company. Here we go. So what I do is I go to Koifin and then I put in XLC. This is koifin.com, XLC. And then this is the index itself. And then I click on it, and you could look at a graph, you could look at historical performance, or you could look at a holdings snapshot, right? So I'm looking at XLC, and I see that this is rallying, right? As we could see here, and we're above the 2019 highs. So, all right, let's look at the holdings. I'm doing a bad job of showing off how great Koifin is. Some investor I am. Needless to say, it's down here at the bottom. You see down here at the bottom, ETF holdings? And then you could just scroll. And you have all of them. Charter Communications, Verizon. It tells you the percentage, AT&T, Take-Two, right? So we go down. As you go down the list, and I learned this the hard way looking at this sector, the further down the list you go, the crappier the stocks look. Stick to the bigger one, which, by the way, reminds me of something, which before I get into the next chart, reminds me of something, and it's that there are two big themes right now going on. Two big themes. Number one, these two charts. At the top, you have the US versus Europe. The trend is up, folks. It has been up. It was up in the first quarter. It's up now. US over Europe. That has not changed. And then down at below, mega cap growth. The market's not buying value. They're buying growth. And they're not buying the smaller guys, as my joke, even though I was serious in communications, the ones at the bottom in terms of market capitalization, in terms of weighting, do not look anywhere near as good as the Google and Facebook and right, and even Take-Two. Those look better. Why? Because the larger stocks, the growth stocks, those are the ones that are winning. The smaller value, they look terrible, right? Particularly relative to larger mega cap growth. So these are the two big themes that I think we need to be aware of. So that's number one. So now let's break it down. So then what are we doing? We're looking at the communication sector. It has my attention. So then, okay, fine, communication sector has my attention. What's in the communication sector? I mean, I know what's in it because this is what I do every day. But if you didn't know, and let's just say you discovered, let's just say it was oil services for whatever reason got your attention, then you want to go to Koifin. It's free. Put in OIH, which is the oil services index, punch up the components, and you're going to get the whole list. It's fantastic. All right. So what do? We look at communications, then we look at the biggest components, Facebook, Google, T-Mobile, by the way, breaking out nicely, Electronic Arts, Netflix also breaking out. So we want to be long Netflix. The trade has been be long Netflix if we're above 400. We have been, and as long as we're above 400, Netflix is a buy with a target of 540. So we have 140 points of upside in Netflix, in my opinion. And we were buyers last year. And we hit our target. Our target was 400 because those were the former highs in 2018. So our targets have been hit. And now this is a new trade. This is a different trade. So it's not like one of those things where like, yeah, we were super bullish last year and we're still bullish. No. These are two different trades. That target was hit. Profits, great, home run, do your victory dance, your ocho cinco end zone, whatever it is that you do, high five, play like a champion, whatever it is you do in your office, great. This is now a new trade. And if we're above 400, I like it long. And it's really part of that whole space. Communications are doing well on an absolute and relative basis. Google, Facebook, they look great. Facebook's breaking out of a multi-year base. And then other components like Take-Two, like Netflix, also look great, and then there's also some that look terrible. For example, Twitter doesn't look very good. OMC, Omnicorp Group, I don't know what the heck these guys do. And I'm not going to find out either because I have no interest in finding out. Viacom looks terrible. Fox, all you Republicans out there, close your eyes. This thing is a disaster. CTL, CenturyLink, I don't really know what they do. Disaster. Dish Network looks like crap. Discovery looks like crap. So you can't just blindly buy the whole space. And I think what that speaks to is, do we really want to blindly buy the whole sector index, even though it looks great, because it's being dragged down by the Foxes or some Dish Network or some of the other ones? I think we own the best. I think we own the strongest ones. Facebook looks great. If we're above 220, Jeremy, I think we got to own Facebook. I think it's got a 300 handle on this thing.
Yeah, it's a big difference between a headline trader, somebody just catching headline news and trying to make investments, versus a real calculated trader. Folks, that was a beautiful demonstration of the difference between a professional and an amateur. A professional will go one layer deeper. Someone will hear, or, oh, look at the communication sector. Looks like it's doing pretty well. I'll buy that sector or get involved in that sector. And they don't understand that there could be a few dogs that are there. And when those dogs start to they can bring the whole train to a stop, which is doing what? It's adding risk to your portfolio. Underperforming, a bad performing company could really ruin the momentum you have. It could take away from some of the profits, but it also could cause risk and harm. So by going in and getting one layer deeper into it, finding the specific stocks that have the best potential, you're actually mitigating your risk. A lot of people think, but the more stocks I own, the less risk I have. Not necessarily. The modern portfolio theory twice now has been seen to almost come to a breaking point. Modern portfolio theory talks about how a diversification of the asset classes that you will not have as much risk on the table, right? So diversify between different asset classes. However, in extreme capitulation environments, meaning people going to cash, everything becomes positively correlated. And when that happens, that diversification and spreading things around actually don't provide that much risk. That's why in 2008, 50%, a lot of portfolios were down 50 and 60 and 70%. And these are safe, diversified portfolios.
Warren Buffett lost 60%.
Yes, Warren Buffett. Yep. And so that was what I said, where it comes to a breaking point. And the whole point of what JC does and his whole entire approach is, yes, he's a capitalist. The guy loves making money. You absolutely unequivocally will get him more. Nothing gets him more excited, even wine, than making money. Part two to that, though, is making smart money, right? Just not going out there and rolling the dice and saying, oh, I like, and like, oh, this stock sounds sexy. The name, the tech behind the stock, whatever it is, sounds cool. It is what gets them really excited. And the absolute core of all-star charts is finding opportunities that have ridiculously low risk and way huge high upside potential. And so
that know we're wrong early.
Yes. Yeah. Cut your losses, as early and as fast as possible. And it's all based off of the rationale of why you did it in the first place. If you can understand why you got into it in the first place, you should know exactly why you would get out of it in the first place, or why you would stay in it in the first place. Common thing that a lot of hedge fund traders talk about is when they're looking and analyzing a trade is, would they buy the trade again? Would they take, with all the information they know now, would they do it again? And if the answer is no, then they should be out of that position all day, every single day. And so I liked your analogy, or I liked your another note about how it's a different trade. Just because a lot of people don't do this, they lump a trade into the ticker symbol. And that's it. It's just it's all the same to them because it's the same stock. And the rationale why you get into it, and I'll ask people this question: do you think that the Lakers today with LeBron James is the same with the Lakers with Kobe Bryant or with Magic Johnson? I would argue they are not the same team, right? They are not the same team. And so why LeBron James, when the NBA resumes, he will win another championship, is not the same reason why Kobe won his championship and why Magic won his, right? They're different reasons because they're different teams. And the same reason why, I don't want to be a fan of the Lakers anymore. I don't like LeBron. Could be your total prerogative. That's what you can do. And you can do the exact same thing with a stock anytime you want. When the information changes, so can your mind and so can your money. My rant's over.
I have a blog post that I haven't published yet called Letters and Math. Right, I had my buddy Howard Lindzen, who down in Southern California. Howard was like, "Oh, these from failed moves come fast moves." He was like replying to like a chart I tweeted on StockTwits. He's like, "Oh, this is my favorite pattern, but I'm not in the mood to buy silver." It's like, wait, what? Didn't you just say this is your favorite pattern? Like, what are you talking about? So then a client of mine emails me last night. I opened it this morning. And he's like, JC, great conference call on Monday. He's a new customer. My first conference call, I loved it. I thought it was great. But I can't buy Tesla. My morals don't let me invest in a fraud. What? What are you what? Like, just the thought process of this, chances are, as an investor, especially if you own index funds with a ton of stocks, you're going to end up making money in companies that are going to end up being frauds. So number one, what are you going to do? You're going to keep track of every stock you've ever owned and see if one day they become frauds and then take those profits and send it back or something? Like, what are you talking about? Like, you're guaranteed, if you own an index fund, you're guaranteed to own a fraud.
It's hilarious. I would have people tell me the same thing about why they wouldn't take investments. And one of the things I would tell them, that's like the rationale behind that is like you're skiing, okay? You got your ski equipment on, you got in the chairlift, you got to the top, and you're like, I'm not going to go down this run because there's snow on it. And you're standing in snow. It's like, well, wait, huh? Wait, what? Why are you here again? You know what I mean? Like, what's the point? Yeah, man, their biases can get in the way. These are also non-repeatable, scalable, profitable decision-making tactics, right? When you're basing things off of an emotion, I don't feel like it. Okay, it's not repeatable, it's not scalable, and it's not profitable. That goes against all things technical analysis. The whole point of what we're talking about now is to try to come up with a methodology that's repeatable, scalable, and profitable. That's the difference. That's how you'll make money in this. Doing anything but that is luck, dumb luck. And let me tell you something, you can't go and get a business loan if you go up there and be like, I feel lucky. Okay, just give me some money. I feel real lucky here. And but what happens if this happens? If that happens, you wouldn't do it. And we approach so many other things in life like with a rational sense. And so many people approach trading and investing with this like pray and hope strategy. And it's just like, what? And it doesn't need to be that hard.
We all do it. Like we all have biases. Like I'm talking about this particular bias just because my friend Howard Lindzon, and I tell him to his face, like I'm not like, hating on him. Like there's no reason if he loves this setup, whatever the setup might be, like take your emotions out of there. And like my clients, these guys manage $1 zillion. These guys are so humongous and they make the silliest egotistical mistakes that they should know better. And they'll be the first, because these are smart folks. They'll be the first to tell you, yeah, you're right. It's dumb. You're right. And I still can't get over it. And they still won't do it. Right. So like they'll admit, and Howard will too, and my client will too. They'll admit, yeah, that's stupid, but I'm still not going to.
So it comes down to a proven systematic approach. The way to make money, you guys, is having a proven systematic approach. It's something that you can go to and rely on every single day. It's like going out on the golf course with a plan versus going out there with some beers and having fun, right? Sure, at the end of you can have a lot of fun trading. There is a ton of fun out there, but you can also have fun and make money. If you want to do that, you need to have a plan. And I don't think anybody better in our industry in helping you create that plan, fine tune that plan for any type of markets in any market condition than you, JC, which is why I think it's time, before we get into these ticker symbols, to announce the big project that you and I have been working on. When I say you and I really mean you, because this is all of your brain and your effort, your team's effort over the last few months. So JC and I are friends, and I own tradestocks.com. He owns allstarcharts.com. Tradestocks.com is a platform. It's a media company where we get to talk about my favorite topic, which is making money in the stock market. And so I like to have people on. It's great to have people on who are also my friends, and JC is one of those guys. I'm actually legit taking notes on the things that he says because I too am a trader and an investor. And I go back after these, and when I'm tonight or tomorrow, I'll be looking up this stuff too, and tweaking things in my own portfolio based off of the things that we talk about, right? And I used to be a financial advisor. I used to work for a hedge fund for 7.5 years. So for almost 10 years, 10.5 years, I was in this world heavily before starting this media company, Strike Point Media, and doing what we do now. And so I've seen it all, folks. I've seen massive hedge fund traders. I've met them. I've had the privilege of being on panels with them, interviewing them for different podcasts back in the day. And so I've got a fair sense of who's real and who's not. And right now, you guys, I can't tell you how on fire JC is and how he is the man and he's the guy of the hour, because with everything that's happening right now, these approaches that he utilizes to make money in these markets are working, and they're working really, really well. And if you've been following along, which again, after we announce this, you guys, we're going to talk about it, because I want to go into talk about one of the things that I've been doing that he's been helping me with. It's a real trade. But we've been doing this. So I'll cut to the point here. And JC, do you want to do it, or do you want me to say it? Your baby.
Listen, I'm happy to make the announcement. So I'm incredibly fortunate that I lived in New York City for a long, long time, about 15 years after growing up in Miami, and ultimately leaving and moving to California. I basically, over a 15-year period, met and befriended and picked the brains of the best technical analysts in the world. Because if you lived in New York City and you were in you were friends with my friends, at one point or another, regardless of where you lived, you had to come to New York if you're in the finance business. So I would get a call, I'll be like, hey, JC, so-and-so's in town, we're all getting together. Okay. And then other times it would be the folks directly coming from Kansas or Atlanta or Florida or California. Hey, JC, I'm coming into town, get the crew together. So it was one or another. Either I heard from another source or I got directly from the source. But at one point or another, I basically met everybody. I've had a podcast with over 100 episodes already where I'm interviewing the best technical analysts in the world, not to mention my own 20 years of experience where I made every bad decision, in some cases multiple times. So we created a course of technical analysis. This, by far and away, from the bottom of my heart, is the greatest course on technical analysis that's ever been done. I'm not afraid to say that at all. I'm saying that from the bottom of my heart. We have put so much work into it, and it's really everything I've learned, all the lessons, how we use momentum, how we use relative strength, what market breadth is, why it's so important, the intermarket analysis we do, incorporating other asset classes, stocks, commodities, bonds, currencies. All of those intermarket relationships are so important. The different types of charts, candlesticks, line charts, bar charts. Like, JC, what is your process? Which ones do you use? How do you use them? Why do you do it that way? So, like, I have stories on why I do it this way. Who taught me to do it this way? The stupid mistake I did, that is why I do it. I lay it all out. Like, this is everything, Jeremy. This is everything. And other companies in the past have paid me to build courses for them. So I have experience building multiple courses for other people. I'm telling you from the bottom of my heart, this is the greatest course on technical analysis that's ever been done ever. And I'm not saying it because it's me and I'm so great and all this stuff. No, it has nothing to do with me. It's all of the people that I know that taught me that I'm sharing that information with. Because, Jeremy, where you grew up in Cleveland and you're now in California and you were in Chicago, or somebody might be in Hong Kong or Alaska or in Africa, they didn't have the same experiences that I had, right? And I paid a lot for that in a lot of ways, not just monetarily, but like, man, takes a physical toll going through that hustle for so long, in the rat race that is New York City. But I did it, and I survived. No drug habit. I'm not in jail. Like, I made it out of there. And then this is just me. This is just a data dump from my mind. This is everything I learned. I even tell you who I learned it from. I learned it from this guy. I learned it from this gal. I do the best I can to give credit where it comes from.
This is by far the best course on technical analysis. This is not because we're friends. It is because of the content that's there and how you actually go about breaking things down. Einstein was famous for saying that a genius is somebody who can take something that's really complicated and make it simple. Technical analysis, you can spend a lifetime studying it and never learn it all. And the markets are dynamic, so they're changing every single day. So there's something to see, something to catch, something that you can learn as these markets are evolving. And this course takes a enormous step forward in the world of technical analysis. I mean, it is advancing the entire field, the entire industry. There will be entire careers built off of this course, in my opinion.
And it's, what's funny, Jeremy, because Giancarlo. Giancarlo's, for the audience members, Giancarlo's our video guy. He's a Puerto Rican rapper also, by the way.
True story.
Ridiculous. He's an Emmy Award winner, videographer. Actually was just nominated for another Emmy, by the way.
Wow, congrats. Congrats, Giancarlo. It's awesome.
Yeah, big ups, Giancarlo. So this morning, he's like, JC, listen. I know you're supposed to be like humble and everything, but this course, I did something because he takes all the credit for it. This course I made is so good.
You know what? And that's why I'm kind of taking credit for it too. I'm like, oh, I'm so excited. I gave all this stuff about trade stocks. It actually has nothing to do with me or anybody else, including our friend and awesome guy John Carlo. It's all about you know your life's work, man. And you know if you look at a lot of people in their careers when they came up with their best stuff, a lot of times it was in their 20s and 30s, and it's been true for you, man. I hope it's not the case. I hope you continue to make amazing, awesome things. But by far, since I've known you, this is the greatest thing that you've ever came up with. It's the most brilliant piece of work that you've ever established. So what we have done today, you guys, this is our big announcement. We have not talked about this, haven't shared this with anyone at all outside of our two teams. So you guys are hearing this first. Facebook world, you're also hearing this first for the very first time. And so what we've done is the course is going to go for about $500, right? $497 is going to be the cost for the course ongoing. But as a special launch and for the people who are here tonight, we have given you guys a special price. Check out it, click on that link, find out exactly what is in store there. You guys have, if you're not already trying to learn everything you can about technical analysis, and you're trying to make money in the markets, those things don't make sense. You have to use technical analysis, in my opinion, to make money in these markets on a consistent basis. And then if that's true, if you believe the technical analysis can help you, then this course is an absolute 100% no-brainer. And you get access to the whole thing. It's not a monthly thing. It's nothing. It's a one-time charge, and you get access to this thing, and you can watch the videos 1,000 times. And there's some amazing content in there. So by all means, everybody, please go ahead and click on that. Take advantage of that special offer because it's not going to last. We're going to, as the COVID starts to unwind across the country and people get back to their senses, we will too, because it's worth a lot. So how much was your charter market technician training, by the way?
Still paying. My liver's still paying for it. No, I mean, I don't remember. I mean, this was a long time ago. This is like 06, 07. It was probably like maybe $500 for the books for each level, and then maybe another $500 or $600 for the test, probably maybe $3-5 grand altogether. But it's not even about that. And I talk to freshly minted CMTs practically every single day. They're always trying to get me to sponsor them. And I get really beautiful emails, Jeremy, like, JC, I met you 5 years ago and you inspired me, and now I finished my CMT. Like, I get those all the time. I mean, it's amazing. It's so cool. And I'm very grateful for all of that. I mean, it's beautiful to get those emails all the time. For every one troll, I get 100 beautiful emails. Like, I mean, it's a joke. When you finish, and then the advice I always give to them, you finishing your CMT, like, now your career starts. Like, now your journey starts, because now you have the body of knowledge. So now you can actually go and really learn. Like, the classroom stuff is over. It's kind of how I look at it. And I'm really good friends with the CMT. This isn't any sort of competition with them. If anything, this will help you with the CMT if you ever decide to do that, which I encourage everybody to do it because it's fantastic. I think this will help you prepare for that. It's kind of like when I studied for the WSET exam as I was preparing for the certified sommelier. There are other things you could learn. I also am a Japanese sake advisor, which I also passed to prepare for the certified sommelier. So like there's levels, there's things you can learn, different pieces to put in place to help you with the bigger scheme of things. And all this course is I've taken all of the body of knowledge of the CMT Association. I've taken everything I've learned from all the technicians I've met over the last 20 years, including the 100 conversations I've had on the podcast. And this is my process, or this is our process, I should say, as a firm, as a selfishly. And why is this our process? Because this is what we are most confident that works the most consistently, because we first identify what type of market environment we're in, and we have tools to help us do that, which we explain. And then once we've identified what type of market environment we're in, then we're going to take the tools that are going to help us make money in that particular environment. The mistake that most people make, Jeremy, is that they come up with a thesis, or they come up with a strategy or a philosophy, and they try to shove that down the market's throat no matter what the environment is, because their strategy is so good, it's going to work in any market environment. No, it doesn't work that way. First, what market environment are we in? Then based on that, then we use different tools. You know, if you're using a trend following strategy in a range bound market, you're going to get crushed. And if you're trying to have mean reversion strategies in a trending environment, you're going to get crushed. So I think the course does a really good job of that. And by the way, that whole philosophy of first identifying the market environment, then figuring out what tools to benefit, that's Jeff DeGraff 101 all day long. And then he learned that from his predecessors. So we're standing on the shoulders of giants, Jeremy.
Yeah, 100%. The point of asking wasn't, I agree with you. I think everybody should. If you want to become a chartered market technician, go there. The point is that the cost and the time commitment is so relative. What you've really done is all these people that you've met over the years, all the stuff that you learned from the chartered market technician course, you've then put it into a course where you're trying to take somebody who's serious about making money in these markets. And if you could go back in time and say, all right, I want to learn, take me from A to Z. This is what you've done. You've essentially said, I will put together a course, will take you from here to here. Could you go on and become a CMT? Yeah, and you should. Again, don't stop learning. You're a huge component of that. You're a sommelier. I mean, you're learning how to build dams in your backyard. It's one of the things that's probably my favorite thing about you actually is that you're an avid learner and you really genuinely enjoy that. All learners, every single avid learner I've ever met in my life is like that because they also love to teach. And so at your core, you love to teach, you love to give back. And it's so obvious in your course how much joy you get talking about these things that you've learned that have not, and these aren't things that you learned like, intellectually. These are things that you learned and applied to the markets. And this is what you've learned and applied in what people pay you ridiculous amounts of money to hear what you have to say about things, right? About the markets because of these tools, because of these methodologies, these tactics, and the understanding that you have of technical analysis. And so again, it's what I'm going to be teaching my son and my daughter. This is what they should be teaching in every high school in America, in my opinion, is technical analysis. And so, maybe JC, maybe we can think big and maybe this will get picked up and we are, you're the poster child for, prospering, as an individual, because you can take life by the bull by the horns, so to speak, and take life by the horns, and you can do it. But it all starts with actually taking action, ladies and gentlemen, massive action. And someone's done all the hard work, which is put it all down, put his thoughts into one spot, and it's freaking awesome. So I want to get into what everybody's really here, which is talk about the markets. We've got the links dropped. Everyone take advantage of it. It is getting late for people's dinner times and bedtime. So we've got Roku and we've got SMG, and we'll take one more. So if you guys have one more ticker symbol you want us to look at, first person to post it, we'll jump in there. So Roku and SMG.
And then remember, Jeremy, what's cool, Canadian Superior Energy.
All right, and corn. William got us with corn. Seriously, like the future's corn. He asked it earlier if corn's ever going to wake up, but sorry. So Roku, SMG, and corn. Those are the three.
Ralph Acampora, huge mentor of mine. He's the godfather of technical analysis, if you will. And he used to always tell me, JC, always make sure to teach. You always want to teach. You know why? Because it brings you back to the basics. And I've never taught. I mean, I give presentations at different universities and stuff, but that was what he told me. And this is my way of doing that. Is that interesting?
Yeah, it is really interesting, man. And very wise.
Because it brings you back to the basics, and he's 100% right. Because here I am, like putting together like the slides for the educational course, and I'm like, oh yeah, support and resistance. That's called polarity. That's a word bring back to the old definitions. Like the formulas to calculate RSI. Like these aren't like things that like matter, but it's important to understand the way it's calculated, so you know what it means. It's not just some silly line, right?
Yeah, for sure.
So let's start with Roku. I remember I was like the first person I knew that had one for like a long time. I'm like, oh yeah, I got a Roku. And people would be like, I don't know what that is. So this is not an uptrend, right? So this is like when and this is one of those things that like sommeliers and stock market participants have in common. we use a deductive method. If we see a white wine, you know, we know it's not a Bordeaux. We know it's not a Cabernet Sauvignon. It's not a Syrah. It's freaking white, right? So we can just eliminate all the red ones. Same thing like with trends. Like we know this is not an uptrend. We can just eliminate that, right? This is either a sideways trend or a downtrend. Ultimately, I would like to buy an uptrend, buy a breakout, but I mean, truthfully, this is the sheer definition of a hot mess, right? Like, I mean, and that's a real, I mean, Edwards and McGee didn't write about hot mess in the 1940s, but like now that I'm doing this stuff and I call things whatever I want, like that's what this is. It's a hot mess. So this is a technical pattern, is official. I already told Investopedia.com about it. Caleb Silver's doing his best to add that, as well as the Kardashian bottom, onto their glossary list. They have yet to get that approved by the powers that be. Can we get a clear answer on the SNG chart with what we're looking at? We could skip over to corn futures. And I mean, it's messy. I mean, you know, like it's really messy. I mean, is this like where you know, I mean, we're down at the lows, I guess, you know, we're at the bottom of this range, I guess, you know, there's no momentum divergence, which I don't like. And if you look at the daily, still nothing. I mean, it looks messy. We're down here at the bottom of the range, but I'm not seeing any reason to be buying corn here. I'm just not seeing it. It's just not for me, folks, you know?
Yep. I would have to concur.
Oh, Scott's Miracle Grow is what they're looking at. Here we go. SMG on the Amex. Sorry about that. I get these Canadian stocks on the Toronto Exchange. Yeah, this thing's a beast. Here, let me... Yeah, this thing's a beast. Absolute beast. Here, let me share it.
Okay.
So this is Scott's Miracle Grow, right? So here's your peak earlier this year. Here was your low when the market bottomed, right? Which actually bottomed right there on the 23rd. And now we've ripped right through that. So the next target's about 155. Let's get there, reevaluate, see where we're at. But that's the next target is 155, right? And then if you really want to get nasty, you can pull back. Whenever in doubt, zoom out, right, Jeremy?
Yeah, that's right.
Whenever in doubt, zoom out. And if you really want to get, I mean, man, if you really want to use these Fibonacci extensions going back to 2017, I got to tell you, if we're above 142, I see no reason to be long with a target up near 190. Why not? You know, it's had a heck of a move. I mean, this thing's practically doubled very quickly. Not practically, it did double very quickly. So, you know, to be entering right now, it's really hard. But as far as stop losses, if we're above 141, I like this. I think we see 200. Oh, are you not able to see that? I'm sorry. Here you go. So here's that high at the end of 2017. Here's the low at the end of 2018. We've exceeded that. We hit our first target of 141. Next target 192. I think we can get there. But man, Jeremy, this has been a quick double. This thing needs a breather. Like it needs to be doing one of those things that Facebook did, you know?
Yeah, exactly. Taking a little bit of time off. I love it. Well, there you have it, folks. You got it. Facebook. We're going long. We like Facebook. We like Facebook at 1,000 because it's got a really nice ring to it. We've got T-Mobile. We're liking T-Mobile. It's also in the communication sector. Take-Two, TTWO. We're liking that as well. And then Netflix, our target on Netflix, if it's above 400, target of 540. These are 100% completely free live breakdowns. I usually like to go and throw JC a curveball here or there. And of course, we always like to take your guys' input because that gives us a really good feel of the things that he's going to talk about and go through. We cannot leave without you pulling up GLD, my friend. So let's give we're week by week here. We're watching that thing. I think I know what you're going to say, but I still just for, you know, the sake of our audience and to keep with tradition, we'll go through there.
To keep with tradition, we gotta make sure the gold bugs are happy. You know, we can't ignore the gold bugs. The trend is higher, Jeremy. I mean, it's just what it is. It's really, you know, not anything new. Here, let's just share the screen. Whoop. Are you able to see that?
You know, there might be something going on with Zoom because, here we go.
Good.
Yep, I'm good.
So this is what we're looking at. I mean, we're just looking at a major base, a huge breakout at the end of last year. And I think we'll go retest those former highs. But I think the bigger thing that we want to look at is here we're looking at gold miners relative to the S&P 500. Gold mining stocks are breaking out. So this is a huge base in gold mining stocks. This is GDX, huge base. We want to be buying any weakness. The closer we can get this to 31, the better. We've been bullish. It's been working. You know, really nothing new here. I mean, like I said, you know, we've had a huge move. I mean, if you zoom in, huge move in gold miners, monster move. So a pullback would be healthy, would be constructive, would be perfectly normal. And we want to take advantage of that weakness, and we want to buy the gold stocks, Jeremy.
That's right.
Keep buying them. Nothing new.
That's what I say. Keep doing it. Keep buying it. And yes, when we do, it'll be a totally different strategy. So because there's different reasons why we're going to go long. Also, some really good, when it comes back down, everybody can look at some bull put strategies. That's where you're selling the puts. Cash secured, as well as you know, doing it as a spread, and that will define your, when it comes down and hits that support level. So JC, congratulations on launching your brand new course. Everybody who's here tonight, you guys got to be the first to hear about it. We so appreciate everyone's attendance and participation. It makes us keep coming back for more. JC, I can't wait to see some pictures. Maybe you can bring them to the show next week of how the before and afters of the dam. And congratulations again on your huge announcement that you were made on the top Twitter, you know, being one of the top people to follow on Twitter for technical analysis. And man, every time I meet with you, I get reinvigorated about the markets, about technical analysis. And thankfully, I get a nugget or two to help me make some more money. So you're the man. Keep it up. Everybody else, have a wonderful evening. Enjoy your dinner. And we'll talk to you guys soon. Thank you so much.
Thanks, Jeremy.
Thanks, man.